All right, so hey everyone, welcome back to the deep dive. We've been following this real estate tech space really closely, and well, there's been a pretty big shakeup recently.
Yeah, a big one. Rocket Companies buying Redfin.
Huge deal. $1.75 billion all stock. I mean, this really changes things, doesn't it?
Oh, absolutely. This is a major shift in the whole landscape.
And that's exactly what we want to dig into today. Like, what does this actually mean for OpenDoor Technologies, another big player in the same game?
Yeah, OpenDoor, with their iBuyer model.
Right. Directly buying homes, fixing them up, and then reselling them.
Yeah.
Totally different from that traditional agent-driven approach.
It really is. And this Rocket-Redfin thing, well, it throws a whole new wrench into things for them. So, yeah, definitely worth exploring.
Okay, so let's start unpacking this. How might this Rocket-Redfin merger, really turn up the heat on Open Door competitively? What's your gut feeling?
Well, I think the biggest thing is that it creates this really powerful, vertically integrated competitor.
Okay, I'm following you.
So you've got Rocket, right? They're a giant in mortgage lending.
Right.
And now they're paired up with Redfin, a major digital real estate platform.
So suddenly they control what? Like a big chunk of that whole home buying process.
Pretty much from finding a house all the way through to financing, all under one roof.
And the scale of this thing, right?
Yeah.
It's got to be massive.
It is Redfin. By themselves, they have something like almost 50 million people visiting their website every month.
Wow.
And over 2,200 agents across the country, 42 states. Combine that with Rocket's customer base and their infrastructure and mortgages, it's a serious competitor.
So anyone watching Open Door right now, this is a much tougher playing field.
Oh, yeah, no question. And think about the data, right?
I was just going to say they're sitting on a gold mine of data now.
Exactly, over 14 petabytes of consumer data. And that's huge. They can use that to refine their AI models and, really personalize the experience for users.
Get even better at predicting what's going to happen in the market.
Exactly. And that translates into a competitive edge, a real one, especially against a company like OpenDoor.
And then you've got those projected synergies, $200 million annually by 2027. That's got to be a game changer.
Oh, yeah. Those synergies are significant. Basically, we're talking about the benefits they get by merging.
So like saving money by streamlining operations, making more money by offering bundled services, that kind of thing.
Exactly. Think about it. They can cross-sell mortgage products to Redfin's users. They can combine their marketing efforts, save money there.
And probably cut down on overlapping staff and tech platform.
Right. It all adds up to major savings and a stronger bottom line. And that puts even more pressure on OpenDoor, which is still operating as a standalone company.
Okay, so all this makes me think about OpenDoor's existing partnerships. Weren't they working with Redfin already?
They were, yeah. Back in 2019, they launched this partnership, started in Phoenix and Atlanta.
Right.
Basically, sellers on Redfin could get offers directly from OpenDoor.
So a pretty good way for OpenDoor to get new customers.
Definitely was a valuable channel for them. But now Redfin is part of Rocket.
Yeah. So what happens to that partnership now? Is it going to last?
That's the big question, isn't it? It's really up in the air. Rocket might decide to prioritize their own integrated services.
They could just cut OpenDoor loose.
It's possible. And for OpenDoor losing that pipeline of customers, that would be a real blow.
Yeah, this whole situation, I feel like it just really highlights the challenges of OpenDoor's iBuyer model, doesn't it?
It does. The iBuyer model, it's tough to get right. We've seen companies try and then back out.
Like Zillow. Right. And even Redfin themselves with Redfin now.
Exactly. They both dipped their toes in and ultimately decided it was too much. The operations are complex, and there's a lot of risk tied up in holding all those houses.
And OpenDoor stock price hasn't exactly been a shining star lately, has it?
No, it hasn't. It's taken a pretty significant dip since its peak. That tells you something about the pressures they're already facing.
And now you add this Rocket-Redfin powerhouse to the mix.
It just intensifies everything. The competition is stiffer, the financial stakes are higher, it's a tougher environment all around.
So given all this, how can OpenDoor adapt? What are their options?
Well, one option is to try and form new partnerships.
Okay, so find other players in the mortgage or real estate tech space.
Exactly. Try to build their own sort of integrated offering, something to rival what Rocket-Redfin is doing.
Makes sense, kind of level the playing field a bit. What else could they do?
They could double down on their core iBuying service, try to really refine it.
So like specialize in certain types of properties or find ways to make the customer experience really stand out.
Exactly. They could also think about expanding into other related services.
Like what? Home renovation? Insurance maybe?
Those are good examples. Anything to diversify their revenue and differentiate themselves.
And we've got to consider the possibility of OpenDoor becoming an acquisition target themselves.
Oh, yeah, in a market that's trending towards consolidation, that's definitely on the table.
Being acquired by a larger company could give them the stability and resources they need to compete.
Right. It could be a way to survive and even thrive in this new landscape.
And I imagine technology is going to be even more crucial for them moving forward.
Oh, absolutely. They need to keep pushing their tech development, particularly in AI and data analytics.
Got to keep those pricing models accurate and their operations as efficient as possible.
Exactly. That's how they'll stay competitive in this fast-changing market.
But, there could be some silver linings to this whole Rocket-Redfin merger, right? I mean, it can't
Oh,
be all doom and gloom for OpenDoor, can it?
it's not all bad, no. For example, one potential upside is that it might actually reduce competition in the iBuyer space.
How so?
Well, if Rocket-Redfin decides to really focus on their search to mortgage model, they might not be as aggressive about buying homes directly.
So less direct competition for OpenDoor.
Exactly. And the fact that Rocket paid such a high premium for Redfin, almost 63% over their market value,
It's got to mean something, right?
it suggests that investors still see a lot of value in these innovative real estate models.
So that could actually boost OpenDoor's valuation.
Possibly, even if their business model is facing some challenges.
So this brings us to the big question. Why would anyone want to buy OpenDoor right now?
Well, there are actually several reasons. First off, they're the biggest independent iBuyer in the game.
And the market for iBuying is supposed to be huge, what, $83 billion by 2025?
That's the projection. So they've got a pretty big slice of a growing pie. Plus, their stock price is currently pretty low.
Trading between $1.15 and $1.38 in early 2025.
Makes them a more affordable acquisition target.
So they're a market leader with a relatively low price tag. What else makes them attractive?
Their technology, for sure, they've built a really sophisticated, data-driven platform.
Streamlined transaction process, the whole 9 yards.
Right. That's a valuable asset for any company trying to break into the digital real estate market. And don't forget about their user base.
All those potential sellers. They said something like 1.5 million people enter their address on the platform every year.
It's a big number. And those
Right.
are people who are already thinking about selling. That's a huge advantage for an acquiring company.
And financially, I know they've had some losses, but they're not exactly broke, are they?
No, they're not. At the end of 2024, they had $671 million in cash on hand.
So they got some cushion.
They do. Which could make them even more appealing to a buyer. It means they wouldn't need a huge cash infusion right away.
And we've got to remember that this whole real estate tech sector is in a consolidation phase, isn't it?
Oh, yeah. Big time. Companies are merging and acquiring left and right.
It makes strategic acquisitions more likely.
Exactly. Everyone's trying to grab market share, acquire new tech, and build more comprehensive offerings.
And haven't there been some rumors about OpenDoor already receiving some acquisition offers?
There have unconfirmed, but there's definitely some buzz out there. People are paying attention.
And some financial analysts have been lowering their price targets for OpenDoor, haven't they?
Yeah. Deutsche Bank, UBS, Keefe Bruyette, they've all adjusted their expectations.
Which could make OpenDoor seem like an even better deal.
Right. A more attractive and affordable acquisition target.
Okay, so let's talk about who might actually buy OpenDoor. What kinds of companies are we looking at here?
Well, we can break it down into a few categories. First, you've got the real estate tech companies.
Like CoStar Group, they've been pretty active with acquisitions lately.
They have HomeSnap, Homes.com. They could see OpenDoor as a way to compete with Rocket-Redfin.
Zillow is an interesting one. They tried iBuying before and backed out,
They did. But maybe they're having second thoughts now.
especially with Rocket-Redfin being such a formidable force.
Right. Acquiring OpenDoor would put them back in the game in a big way. Then there are the traditional real estate brokerages.
Like Remax or Keller Williams.
Exactly. They need to adapt to the digital world.
And buying OpenDoor could give them instant access to a tech-savvy platform and a huge pool of sellers.
It's a way to modernize and stay competitive.
And what about companies in the mortgage and financial services world?
Well, Rocket set the example with their integrated model.
So maybe other big lenders like United Wholesale Mortgage or Loan Depot will follow suit.
Exactly. Acquiring OpenDoor could let them offer a more seamless experience for borrowers.
From finding a house to getting a mortgage all in one place.
Right. And then there are the mortgage tech companies like Black Knight or ICE.
They already handle a lot of the behind-the-scenes stuff for mortgages.
They do. So maybe they want to expand into direct real estate transactions. OpenDoor would be a good way to do that.
And we can't forget about the big tech giants.
Oh, yeah, they could shake things up for sure.
Like Amazon, they've already shown interest in home services.
They have. OpenDoor could be their ticket into real estate transactions.
And Meta with their whole metaverse thing.
Imagine virtual home tours and transactions powered by OpenDoor's tech.
And even Block, formerly known as Square.
They're already big in financial
Yep.
services. Real estate could be a natural next step.
So lots of potential players here. And finally, there are the private equity and investment firms.
Right, they're always looking for opportunities.
Someone like BlackRock or KKR might see Opendoor's low stock price as a chance to buy low.
Fix the company up and then take it public again at a higher price.
Classic private equity play.
Mhm.
And then there's SoftBank.
They're already a major investor in OpenDoor.
So they could decide to just buy the whole thing outright.
It wouldn't be surprising given their track record in real estate tech.
Okay, so let's say Opendoor does get acquired. What would that actually mean for them, especially given their recent financial performance?
Well, that's a key question, right? OpenDoor's financials, they haven't been great.
2024 revenue was down 26% from the year before.
A net loss of $392 million for the year. And their Q4 loss was $113 million.
Plus, their Q1 2025 revenue projections are already below what analysts were expecting.
And their stock price is down significantly, so yeah, they're facing some real challenges.
So how could an acquisition actually help them?
Well, first and foremost, it would give them financial stability.
Right, they wouldn't be so reliant on debt financing to buy homes.
Exactly. And an infusion of cash from a larger company would give them more breathing room.
Especially since their fees alone aren't enough to cover their costs.
Right. They're really dependent on home prices going up to make a profit.
So less pressure on their balance sheet would be a huge win. What else could they gain?
Well, an acquisition could also give them a much stronger competitive position.
Being part of a bigger organization would provide some protection against all the competition and price wars,
Right. And they'd have access to a larger customer base and more resources.
which could help them gain market share.
Definitely. And there's also the potential for operational efficiencies.
By merging with a larger company, they could streamline their processes and cut costs,
Exactly. Get rid of redundancies, make things more efficient.
which would help with their high transaction costs.
A big problem for them right now.
And in this tech-driven market, access to better technology and data would be huge, wouldn't it?
Oh, absolutely. OpenDoor already uses data, but a larger company could bring even more sophisticated analytics.
More accurate pricing models, even more efficient operations.
And potentially some cutting-edge tech like digital twins for property assessment.
Which could save them a lot of money.
A lot of money. And an acquisition could also help them expand their services.
Offer more things like mortgages, insurance, home maintenance.
Right. That would boost their revenue and make them less reliant on just iBuying,
And it could help them reduce the amount they pay out in agent commissions.
which is a big chunk of their expenses right now.
Finally, let's not forget about the regulatory side of things.
Yeah, real estate is complicated, lots of rules to navigate.
Being part of a larger, more experienced company would definitely make that easier.
Right. They'd have more expertise in compliance, and they'd be better equipped to handle market fluctuations.
So to sum it all up, the Rocket-Redfin deal, it's a game changer.
It really is.
It makes it way more likely that Opendoor will end up getting acquired.
And there are good reasons why that might be the best move for them.
They're a market leader, but they're facing financial headwinds and a tough competitive landscape.
Being acquired by the right company could solve a lot of their problems.
Give them stability resources a chance to really thrive.
It's definitely a story worth watching. How will this consolidation play out?
What's the future of real estate transactions? How will technology continue to disrupt the industry?
Lots of questions, but one thing's for sure, it's going to be fascinating to see how it all unfolds.
Absolutely. So to all of you listening, thank you for joining us on the deep dive. If you enjoyed this analysis, hit that subscribe button, give us a like, and turn on notifications so you don't miss any of our future deep dives. We'll keep you updated on all the latest developments in the markets.